welcome to the February 2025 Real Estate Market Update brought to you by the Reby Homes team. Whether you're a buyer or a seller, keeping up with market trends is essential to help you make the best decision. Although reading articles and headlines can give you a snippet into what's happening, they often use 3-month moving averages when they're collecting data, meaning by the time you're reading them, it's probably 3 to 4 months old. And we all know just how quickly things can change in real estate, so we want to bring you real-time updates so you're as prepared as possible when the time comes for you to make a decision. So let's start with interest rates. We did see a little relief last week, and rates are right around the 6.8% mark on average. We know from history that if rates dip below that 5.5% mark, we're going to see significant improvement in buyer demand. Although rates are still higher than the average buyer would like to see, they do come with some benefits. Many buyers have been priced out of the market because of rates, so if you're one of the fortunate ones who can still afford to buy, price reductions, seller concessions, and more options are all available to you. Seller concessions have the potential to help you buy your rate down permanently or temporarily, decreasing your overall monthly payment and allowing you to house hunt with minimal competition. So buyers, if you're asking yourself if now is the right time for you to buy, it definitely could be. Days on market in January, February, and March tend to be higher than the rest of the year, with an average between 42 and 52 days. Similarly, prices are lower in January and February, about 15% lower than the peak month, which typically falls around June, as a result of the seasonally low demand. The median sales price for homes last year in January, February, and March were $378,000 to $392,000. The rest of the year were in the low $400,000 range, peaking at $427,000 in June and ending at $405,000 in December. Again, a seasonal trend that is expected. National equity that homeowners have is still at an all-time high, with an average being around $311,000. $147,000 of that was due to the last 5 years alone. Pre-2008, homeowners stayed in their home on an average of 6 years. After 2008, that number has jumped to a little over 9 years. This is due to many different reasons, but that increase in time in your home, plus the massive appreciation that we saw over the last 5 years, has resulted in a significant jump in homeowner equity across the country. Here's a graph showing the rate of appreciation over the last 5 years, and we can see just how drastic it's been across the board, with some states such as Idaho, Montana, Tennessee, and the Carolinas seeing over 70% appreciation. Here in Arizona, we saw about 68%. All of this to say, now that we're back to a normal market, it's important to put into perspective how much the last 5 years impacted homeowners, and that it's okay that homes are not appreciating nearly as much as they have been. The slowdown is actually much needed for the sake of our economy and the future of homeownership. So, sellers who bought 5+ years ago, remind yourselves that despite the market feeling slow at the moment and feeling like you're not getting the price you wanted for your home, you've still amassed an incredible amount of equity in a short amount of time. According to Redfin, 2025 will be a renter's market, and that's because the cost of buying a home has continued to increase. They expect rental affordability to improve and rents to remain flat throughout the year, just as they did last year. Also expected is an increase in the number of rental listings. Despite all of the uncertainty and hesitation in the world today, real estate is still considered the top long-term investment according to 36% of Americans, while only 22% of Americans believe that stocks and mutual funds are the best route to take. Although many Americans are discouraged when it comes to the housing market, according to a report put out by NerdWallet, there's still a healthy amount of optimism surrounding buying a home. The study they did asked who had hopes of buying a home this year, and that number was higher than it's been the past 5 years. So we're loving the optimism. And now let's take a look at our local market here in the Phoenix metro area. Buyer demand right now is stable. It's not decreasing, but it's not increasing either. We'd consider this a normal state, seasonally speaking, for our demand. Inventory, however, has increased. Typically, we see around 24,000 active listings on the MLS this time of year, and we currently have just over 21,000. So still below historic norms, but much, much higher than recent years. That jump, mixed with the stable demand, is what's causing more price reductions, longer days on market, and an increase in seller concessions. It's not a sign that the market's about to plummet. This graph shows contract ratios dating back to 2010. It's a great depiction of seasonal trends in terms of contract volume each month of the year. The blue bars reflect January through March, or Q1. The green bars represent April through June, or Q2. The orange to red bars represent July through September, or Q3. And the yellow to orange bars represent October to December, or Q4. With the exception of 2021 and 2022, there's a pretty clear pattern that shows the blue bars, Q1, at the lowest points, followed by green or Q2 slowly increasing, typically peaking in June, and then a steady trend back down through the yellow and orange, hitting bottom in the subsequent month of January and starting all over again. If we look at just the last 2 years, we can see the volume has significantly decreased, more in line with 2014 to 2019 numbers, but that seasonal trend line is still there. So we know overall volume of sales is and has been historically low and will seemingly remain low through 2025. But why is that important for buyers and sellers? For sellers, it's important to understand how this will impact your sale. Unless your home is the perfect combination of great condition, location, and price, plus the willingness to offer some concessions or negotiate during inspection, your home may take longer to find the right buyer as there are fewer of them out there, and the ones that are out there are much more picky. That means it's good to get comfortable with the idea of price adjustments, concessions, or investing into the condition of your home and have a little patience. For buyers, this is great for you. Flexibility in price, opportunity for concessions, and little to no competition is what you're looking at. These are the markets where you have more to choose from and more room to negotiate. So if you can, take advantage. Average days on market is sitting at 80 as of the end of January. This graph dates back to 2020, so it seems much higher than usual, but if we zoom it out and include 2010 through to today, it doesn't seem so drastic. This just shows that we're in a market similar to where we were in 2015 through 2019. Seller concessions are, however, at a historic high. 2015 to 2019 saw an average of about 35% of closings that had seller paid closing costs, with the average amount being around $5,000. We saw that dramatically dip during the craziness of 2020 to 2022 and then jump right back up in 2023. And since then, we've stayed above 45%, with the average amount now around $10,000. This is likely due to home values and mortgage rates increasing, making affordability weak. Concessions are a great way to offer some relief for buyers on their monthly payment or their out-of-pocket cost. And we certainly expect to see seller concessions remain high until affordability strengthens and buyer demand picks up. And the last thing we'll touch on is the rental market. It's remained pretty flat since 2021, with fluctuations occurring in Q3 each year. If you're looking to rent, December through February will be your best bet for the lowest lease prices. And if you're looking to list your rental, June, July, and August will be the best time for that. The average lease price per square foot has bounced between $1.37 and $1.40 since August of 2021, and we expect that to continue until we see a major shift in the market. To sum it all up, things are sluggish, but still moving. Buyers have a great opportunity right now. Sellers are still in a good position overall equity-wise, although they will need to adjust their expectations a bit. And as of now, there is still no indication of a market crash. As always, if you have any questions or would like to see any specific data, please don't hesitate to reach out. We're here to help. Thanks so much for tuning in, and we'll see you next month.